Hello, today we are going to solve May 2023 paper question number 1. Departmental statement of profit or loss and other comprehensive income for the year ended 30th April 2023 showing the profit and loss made by each department. So let's calculate. The first one is going to be the revenue. Okay, the revenue is going to be the first one is 160,000. Then you have this 640,000. Okay, this is also here for the packaged food. So then we increase, okay, opening inventory. So opening inventory is going to be 2000. So the opening inventory is 2000, and for this one it is 28,000. And then purchases are going to be around 97,500. Okay, purchases are going to be 97,500. So, and then for the packaged food it is 549,700. And then you have less returns. Okay, returns for the only for the packaged food, it is not for the fresh food, so less returns. So of the thing, then you have, so now closing inventory, the closing inventory value is 1500 for the fresh foods. Now let's add up all this, okay, to find the cost of sales. So the cost of sales is goes at 500, it is 98,000, is going to be 544,000. Okay, now we have to calculate the gross profit. Okay, the gross profit is going to be revenue minus this cost of sales. So let's calculate that. So the revenue is around 160,000. Okay, the revenue was around 160,000 minus 98,000. So that is going to be equal to 62,000. And for the packaged food, the revenue is 640,000 minus 544,000. That's going to be equal to 96,000. So this is the revenue, gross profit. Next we have to calculate the expenses. Wages. So the wages is allocated expenses, it is 21,000 for the packaged food. Okay, so 21,000. So let's write that, and 21,000 for the wages, and for the packaged food it is 32,000. So let's write that. Now so the management salaries are apportioned based on the total cost is 42,000. Okay, this is the total cost 42,000, and we have to divide it in the ratio of 7:13. So 7 divided by 7 plus 13 times 42,000, that is equal to 14,700, and the packaged food will become 13 divided by 7 plus 13, that is into 42,000, that is 27,300. 14,700 and 27,300 for the packaged food. Now the premises running costs are apportioned on the basis of 90 and 270. So let's write that. So the value of the total expenses is 9,600. This we have to split in the ratio of 90 and 270. So 90 divided by 90 plus 270 times 9,600, that value is 2,400. And for the packaged food it is 270 divided by 90 plus 270, the total, into 9,600, that is 7,200. So now so the premises cost is 2,400, and this is going to be 7,200. So advertising was owing, so we have to adjust that 10,900 plus owing expense 2,100, that is equal to 13,000. Okay, this was the premises, this was the advertising expenses that was incurred. So now this 13,000 has to be split between these two, this. So you take 13,000 and you split it in the ratio of 160,000 and 640,000. So the values will be like this. It is equal to 2,600 and 10,400, equal to 2,600, and then for this one it's going to be equal to 2,600 and this is going to be equal to 10,400. So 10,400. Then electricity and water. Electricity and water also the expenses, there was some adjustments. So the total electricity expenses, okay, was around 8,400. So it was around 8,400. Okay, and then this was prepaid by 130. So you remove prepaid expense and you add the owing expense 280. So that value is going to be equal to 8550. So this becomes the total expense, okay, after adjustments, okay, for each department. So 40% of 8550 is 3420 and 60% of 8550 is 5130. 3420, okay, and this one is going to be equal to 5130. Now insurance is apportioned on the basis of 90 and 270. You take 1,800. So 90 divided by 90 plus 270 is 450 and 270 divided by 90 plus 270 times 1,200. Okay, so that is 1350. So let's update here 450 and so update here. So it will be 450 and then the other one is 1350. Okay, next credit card expenses. The credit card expenses were 5,500. So the total, you take the total credit card, so 160,000 divided by 160,000 plus 640,000 times 5,500, that is equal to 1100, and packaged food you apportion it on in the basis of this ratio, so you will get 4,400. So let's write that. Okay, so it is apportioned, and so credit card expenses is going to be 1,100 and this one is going to be equal to 4,400. Next, the bank loan interest. Okay, the bank loan interest has to be adjusted. They have given bank loan as 40,000 and the interest paid was 2,200. Here one more information is given that 10% of bank loan was taken on 1st August 2022 and is repayable in full on 30th June 2025. If we calculate, okay, they are ending they didn't take it on 1st April 2022. They have delayed it, okay. They have delayed it by 3 months. So they have taken from 1st August to April 2023 is about 9 months. So the bank loan interest, it is 10% of 40,000, okay, that is equal to 4,000 times 9 by 12, that is equal to, okay, that is going to be equal to 3,000. So the interest, so we have to apportion this 3,000 on the basis of 160 and 640, and we get 600 and 2400 in this ratio. 600 and this is going to be equal to 2400. Now next one is the depreciation, the leasehold premises. So now the leasehold, we can see that the cost was 60,000 and the lease period, okay, the lease period was at least 20 years. Now 60,000 divided by 20 years is going to be 3,000 pounds every year you have to pay, you have to account for the depreciation. This 3,000 has to be apportioned between the department in the at the 40% and 60% ratio. So 40% of 3,000 is 1,200, and for the packaged food it is 60% of 3,000, 1,800, 200 and 1,800. Next we have fridges and equipment. Fridges and equipment, okay, there has been some calculation, like a cost of 6,500 and it had an accumulated depreciation of 5,200. Okay, so we have to include this cost, and this was replaced by another fridge costing 12,000 pounds. So there was a new fridge that was brought and all was made by the check, okay, all payments. So no entries for the sale of purchases had been recorded. This carrying value was 6,500 minus 5,200, that is 1,300 pounds was its carrying value. Now the total cost, okay, now adjusted is, we had 28,000 plus 28,000 plus a new equipment was bought 12,000 and the old equipment was sold. So the total cost will become 33,500. Now adjust the accumulated depreciation. So 26,200 minus this sold value, we have to remove accumulated depreciation minus 5,200, that is 21,000. Now let's calculate the depreciation using this cost and the remaining accumulated depreciation. So 33,500 minus 21,000 times the rate is 20%, that is 2,500. Now this has to be split using 40% and 60%, and the value is going to be 1,000 and 1,500. So let's update here. Okay, the value is going to be equal to 1,000 and 1,500. Fixtures and fittings, it will be, the cost is 22,500 times 10%, that is 2,250. Now this has to be split in the ratio of 40% and 60%. So 40% and 60% value is 900 and 1,350. So 900 and 1,350. The total expense value for the fresh food will then become equal to 49,370. 49,370, and for the packaged food it's going to be equal to 94,830. So the departmental profit for the year is going to be equal to this gross profit, okay, this gross profit minus gross profit 62,000 minus 49,370, that is equal to, okay, this is equal to 12,630, and the gross profit for the packaged food will be 96,000 minus 94,830, and the value is going to be equal to 1170.